Here is the question that has every metals trader talking this Wednesday morning. How on earth is silver climbing towards $60 an ounce at the very same moment that inflation fears are mounting across global markets? As of today, the 22nd of July, 2026, silver, known in the forex world as XAG/USD, is pressing firmly up against the $60 mark, a level that just a few months ago looked like a distant target. Most conventional wisdom tells us that rising inflation erodes confidence in risk assets and prompts investors to pull back from commodities. Yet silver is doing the exact opposite. It is surging. And if you want to understand why this is happening, what it means for your money, and where XAG/USD could be heading next, you are in exactly the right place. Stay with us, because what is driving this market today is one of the most instructive stories in precious metals in months. Let us start with the raw numbers, because the facts here are genuinely striking. As of today, XAG/USD is trading near the $60 level, building on a rally that has gathered serious momentum over recent weeks. To put this in historical context, silver had already broken above $56 per ounce back in late November 2025, which at the time represented a record high for the metal. It then pushed even higher, briefly touching the $70 level in March 2026, following signals from the Trump administration about what were described as good talks with Iran. Since that peak, silver pulled back in an orderly fashion, but it has not surrendered its structural gains. Now, in the third week of July 2026, the metal is staging a fresh and determined pushback towards $60. The drivers behind this move are multiple, interconnected, and showing absolutely no sign of fading anytime soon. Here is where it gets genuinely interesting, and this is the point that often catches newer investors off guard. We have mounting inflation fears gripping global markets, and yet silver is going up. Surely inflation should weigh on commodities? Actually, precious metals tell a very different story, and understanding this is one of the most valuable insights you can take away from today's video. When inflation rises, the purchasing power of paper currencies declines. Investors who are worried about their savings losing real value start looking for assets that hold their worth over time. Silver, like gold, has served as a store of value for thousands of years. It cannot be printed by a central bank overnight, it cannot be devalued by a government decree, and it has genuine industrial applications that provide a constant floor of demand. So when inflation fears mount, the fundamental case for holding silver actually strengthens considerably. What we are seeing on the 22nd of July, 2026 is a textbook example of this dynamic playing out with full force. Beyond inflation, there is another powerful force pushing silver higher today, and that is the escalating situation in the Middle East. Geopolitical hostilities in the region have intensified sharply in recent days, sending investors rushing into traditional safe haven assets across the board. Gold has long been the first port of call during times of geopolitical stress, but silver is increasingly being treated as a compelling alternative, particularly given its lower price point and its dual role as both a monetary metal and a critical industrial input. Reports of fresh US-Iran negotiations have added a further layer of uncertainty to markets. Hopes of a diplomatic breakthrough briefly lifted risk appetite earlier this week, but any breakdown in those talks could send silver surging even higher as traders retreat once again to the safety of precious metals. For now, the combination of active geopolitical risk and persistent inflation pressure is creating a formidable and sustained tailwind for XAG/USD. There is one more piece of this puzzle that deserves careful attention, and that is the sustained surge in global oil prices. Rising energy costs feed directly into broader inflation expectations, because oil is a foundational input across virtually every sector of the modern economy. When businesses face higher energy bills, those costs eventually filter through to the prices consumers pay, keeping inflation elevated for longer and maintaining sustained pressure on central banks to respond. That ongoing uncertainty is precisely the kind of environment in which silver has historically thrived. Additionally, higher oil prices can weaken the US dollar, because they tend to increase America's trade deficit and raise concerns about broader economic performance. A softer dollar makes dollar-denominated commodities like silver cheaper for international buyers, which stimulates demand from markets across Asia, Europe, and beyond. So in a somewhat counterintuitive way, the very oil surge that is causing so much economic anxiety is simultaneously one of the forces propelling XAG/USD higher this week. So what does all of this mean in practical terms for anyone who currently holds silver or is considering adding it to their portfolio? The first point to appreciate is that the current environment is genuinely and substantively supportive of higher prices. You have inflation acting as a structural tailwind, you have geopolitical risk driving safe haven flows, and you have oil contributing further inflationary pressure. These are not short-term blips that will vanish overnight. They are sustained macro forces with real staying power. That said, silver is one of the more volatile assets within the precious metals complex, and it can move sharply in both directions, as we saw during the pullback from the $70 peak in March 2026. Anyone entering this market today needs to be clear-eyed about the risk of sudden reversals, particularly if there is an unexpected resolution to Middle East tensions or a sharp correction in oil prices. Balanced positioning and disciplined risk management remain absolutely essential for any investor in this space. From a technical standpoint, the $60 level is highly significant for XAG/USD, and traders worldwide are watching it closely. It represents a major psychological barrier, and how silver behaves around this zone over the coming sessions will be extremely telling. A clean break above $60 and a sustained close at that level would likely attract fresh momentum buyers and could open the path towards a test of resistance in the $65 region. On the downside, meaningful support is seen in the $55 to $57 range, which aligns with the breakout zone that was established back in November 2025. Looking ahead to the next few weeks, the outlook will be shaped primarily by two factors: the trajectory of upcoming U.S. inflation data, and developments on the geopolitical front. If inflation readings come in hotter than expected, or if Middle East hostilities escalate further, silver could push convincingly beyond $60 in fairly short order. The balance of risks today points firmly to the upside. To bring everything together, here is the clearest possible summary of what today's silver market is telling us. We are in an environment where traditional safe haven logic is working with full force. Inflation is a genuine and persistent concern rather than a transitory blip, and geopolitical risk is not going away anytime soon. Silver trading near $60 on the 22nd of July, 2026 reflects all of these forces converging at precisely the same moment. The metal has already demonstrated remarkable resilience, climbing from its lows to repeatedly challenge record highs across the past 18 months, and the structural backdrop remains broadly supportive of further gains. Whether you are a long-term investor looking to protect your wealth, a short-term trader seeking momentum opportunities, or simply someone trying to understand what is happening in global markets right now, silver is a story you genuinely cannot afford to ignore. Thank you for watching today's analysis. Please subscribe to the channel so you never miss our daily precious metals updates, and we will see you in the next one.